Welcome back to another episode of Investing Explained. Here's today's question. The short answer to your question is no. Do not leverage your position. And there are multiple reasons why I would suggest that you do not do that. And I really want to start up my response with a Yogi Berra quote. And the quote is this: in theory, there is no difference between theory and practice. In practice, there is. And what I mean is that in theory, you are right. In case of high inflation and low interest rates, you can effectively erase your debt and keep the real asset. Say it could be gold, and then maintain your purchasing power, which in theory would be very profitable. However, even if you are right, the volatility of what would happen between now and whenever your desired scenario plays out could wipe you out. And that really makes me think of Rick Guerin. Rick Guerin was a very successful value investor who was involved with Buffett and Munger in the early days of Berkshire. And the way Warren Buffett explained what happened was this. He said that him and Charlie knew that they were always going to be incredibly wealthy, but they were not in a hurry to get wealthy. So what about Rick? Well, Warren said that Rick was just as smart, but he was in a hurry. So in the 73-74 downturn, Rick was levered with margin loans, and the stock market went down almost 70% in those 2 years. And so he got the margin calls, and he sold his Berkshire stock back to Warren. Actually, Buffett bought Rick's Berkshire stock at under $40 a piece at the time, and now his Berkshire Hathaway's A shares are trading more than $300,000. If you look at the track record of Warren Buffett and Rick Guerin, they're not that much different. But how they leveraged themselves was very different. That was eventually why Warren Buffett prevailed. The time it takes for you to be right might bankrupt you. The second reason is that you could be wrong. Even the great investor John Templeton said that he was wrong 1/3 of the time. And looking back of his track record, I mean, he was one of the most successful investors ever and arguably the most successful international investor in the 20th century. So if he's wrong 1 out of 3 times, and he even said that might be on the low side, we would likely do no better. So that's another reason why not to leverage your bets. And you also said there in your question that you are not a high net worth investor. I don't know if that also implies you don't have a lot of experience, which could also be an issue if you're working with that. I mean, you do have investors like Ray Dalio who takes leverage bets from time to time. But Ray Dalio is a high net worth investor, and he knows exactly how to structure a few leverage bets here and there, and only for a small part of his portfolio. So even if you want to test it out, which I would strongly suggest that you do not, you really should be doing this with very small amounts of your portfolio. But really, to sum up, I completely understand where you're coming from, and it is an interesting thesis where you might be right. But if you want my advice, please do not take leverage bets on the expected inflation and interest rates.
So Tim, just to piggyback on Stig's recommendation, which I completely agree with, in theory, you got it all right. Like what you're talking about is as far as borrowing money and then paying it back with money that's worth way less is a very non-intuitive idea that people, I don't necessarily, as we move forward in the coming few years, and I think things are going to get very interesting, people that have a lot of debt are going to find that it's actually advantageous if they're paying it back with money that's significantly worth less. Now, here's where this all gets a little bit tricky. So the environment that I kind of expect we're about to step into is going to get very depressed. My expectation for how the economy fundamentally is going to perform in the coming 3 years is not good. I suspect that there's going to be a lot of people that are struggling for work. Ray Dalio is on the record as saying that we're entering into a depression at this point. Believe it or not, that's the quote that he actually has and how he's described this. If that plays out, you might have had all the logic exactly right as far as borrowing and then owning some type of hard asset. But it really comes down to your personal skill sets and the demand of those skill sets going through a very challenging economy. That's the thing that's really important. So if you have, let's say your house, let's say a person would go out and buy a house that they're taking out a lot of debt. They're highly leveraging themselves because they're wanting to play this idea that you're talking about. If that person's skill set in the environment that I just described, which is going to be a very, very shaky economy, doesn't hold up, and that person is not going to be able to keep that same rate of pay and salary that they were receiving when the economy was where it's at right now and before, now you're putting yourself in a bind to even make the payments back on that debt. So is it okay to have some debt? Of course. How much really comes down to your own personal tolerance. It comes down to your personal skills and how those skills are going to endure and perform in a very challenging economy. And I think that's where people might not be accounting for how bad things could potentially get moving forward. And my anticipation is it's going to get a little crazy. So something to think about. You definitely understand the fundamental idea of what's about to play out here, and that's that the people that are lending money are, they're not going to do so well. The people that are borrowing it are going to have an advantage, but the challenge is, are you going to be able to sustain the salary and the pay each month in order to continue to just make the minimum payments on something like that? Very interesting question, very smart question, but I would tell you to be very careful with that.
That's it. Preston and I will continue explaining investing, so go ahead and hit that subscribe button.